Professor Bibek Debroy, Professor at Center of Policy Research, joins us live from New Delhi. Professor Debroy, good to have you back on ET Now. Thank you for joining us. Professor, in last 24 hours and last 48 hours, we've got a slew of measures. RBI has announced some moves. Yesterday, FDI has been approved in key 9 and crucial sectors. But whichever way I cut and dissect the news flow, I guess the entire attempt here by the regulator and by the government here is to attract dollars. Okay. Now, what I'm trying to really understand from you is the following. In last 48 hours, in last 24 hours, we've got a lot of news flow. First from RBI and then from government last evening, where they have increased the FDI limit in 9 important sectors. Now, whichever way we cut and dissect the news, I guess the entire attempt here is to fix the rupee and to attract dollars.
Well, yes, because look, there are two separate points that you're raising in your question. Firstly, the RBI part of it. The RBI part of it is, I would describe it mostly as a knee-jerk reaction. What it does signal is a rise in interest rates. What it does signal is that any hopes of a further reduction in policy rates is off. That's not going to happen. So that's bad news for growth. That's bad news for investments. That's on the RBI part. And let's accept that many of these things that we are talking about, whether it's the rupee depreciation, whether it's the current account deficit, these are really symptoms. They are symptoms of a broader malaise, and the RBI can't fix it. Coming now to the decisions that were taken yesterday on FDI, any liberalization is welcome, but I have 2 or 3 caveats to mention. The first kind of caveat I have is that while FDI liberalization signals reform intentions, per se this does not necessarily mean that that there is going to be a dramatic increase in capital inflows, because we know all kinds of problems that have plagued investments, domestic and otherwise. Secondly, when one is looking at FDI, there is an automatic approval route and there is an FIPB route. The FIPB route definitionally implies discretion, and that is best to be avoided. A classic example of that is defense. I would have ideally liked a situation where FDI is thrown open to 74% or even 100% across the board. The third point I want to make is some of these things, understandably, they require legislative changes, particularly pensions and insurance. So while the intent of the liberalization is desirable, should be lauded, I don't think one should read too much into it in terms of providing a growth or an investment stimulus.
Vivek, so then would it be fair to go by the finance minister's projection in terms of the GDP, 6% this fiscal, 7% the next, or do you think there's a very minute chance that we may actually be able to achieve these targets?
Well, look, 7% next fiscal is too far away. By then we'll have had elections and all kinds of things. 6%, I think, is on the high side, which, by the way, is a lowering from the initial 6.7% that was talked about. I would be very surprised if we actually crossed more than 5.5.
Right. Professor, even though the FDI floodgates have been opened, do you think dollars will not flow in because the investment climate is not supportive? This is not 2006 or 2007 where every foreign investor was desperate to come to India. In fact, now the wheel has turned the other way. Everyone is desperate to get out of India.
Yes, that's precisely the point that I was making, that we have any number of domestic problems, including procedural ones connected with land, environment, forests, all kinds of things, regulatory kind of issues, bureaucratic decision making. So while the intent, if the intent is to signal to the rest of the world that, look, India is serious about reforms, obviously it's a good signal, subject to what I've said about discretion. If the intention is to expect an immediate increase in capital inflows towards FDI away from portfolio investments which tend to be volatile, I don't think that's going to happen, because there are many competing destinations also, and India doesn't do that well on the doing business indicators.
But FDI increase in defense, that should be rather easy. Defense is a big opportunity. We are one of the highest defense spenders in the world, and at 49%, I'm sure there are a lot of global defense companies, they would like to enter into local JVs.
Yes, of course. But then the question to ask is, if that's a valid argument, then why has it not been increased to 49%? And the reason I'm mentioning this is symptomatic of a lack of cohesion across different ministries. And there are understandably vested interests which have lobbied against an increase in the FDI hike in defense. I do not want the FDI in defense to be routed through FIPB. I want it to be through the automatic approval route. So I would have been far happier had that in defense been increased to 74% or even 100%. What's wrong?